All right, y'all, we finna get ready to start. Everybody drop it in your group. Let your team know that we are on the Zoom. Let everybody in your group know we are on the Zoom. We're gonna go ahead on and get started in the next 5 minutes. Tonight, gonna be like a real quick deep dive. I'm gonna touch on a lot of different stuff. Um, Giving you guys pretty much the overview in very descriptive details. We're gonna cut out all the extra words in this training, right? Because again, the standard tax code, if you don't know, is about 78,000 408 pages long, literally. And only 5% of it is actually tax relevant. Everything else not really, applies to taxes. So with that being said, the same way we would have to break down the tax code to be able to teach you guys this stuff, I'm gonna take out a lot of the key information and rules of thumb to be able to instruct you guys tonight. So grab your pen, grab your paper, and this is gonna be very informative. This is gonna be a very informative call. You guys are gonna get a lot of knowledge, and yeah, we'll get started in just a few minutes.
It's like the straight cooking up that woman. Yeah. So we was at the gas station today. I told the bros, like, that's my home or dog. And we all around in farm, so it's super fun coming up with traffic. Kind of felt like I made it for a change. I walked through. Lamborghini truck, Big Dre in the cut. Run them bent it up behind me. Know what's in my cup? Doing 90 in a 35, like don't give a. I'm sorry. Bit the door, I let little Trudeau drive. Make sure y'all don't hit nobody. I can't lie. Rap got us living like we hit the lottery. Dripping, knocking. Not one punch like he got in the Boston. I been flying state to state for drip. I done got in the shopping. Every other day is something fake. I'm ducking paparazzi. He ain't listen, they tap this nigga. Neighbor told me ain't got no budget. This ain't that and that ain't got nothing. I got rich but got folks still struggling. I got bros give a about nothing. I got don't give a about. I ain't did that if she ain't got no what. Money, brain problems, okay, so what? He them too real, they bought me a road truck. I fit it back, they get a newer version. Color on with the stars and they got the captain seeds in the back. I want a white paint with the red goods. I'm all the cars of the match. They be like, ooh, I've been trapping. Gotta put racing gas in my track. Get money, get money, get money. I'm getting money. I'm getting money. I'm getting money. I'm getting money. All I do is get money, get money, get money. Get money. I'm getting money. I'm getting money. I'm getting money. I'm getting money. You make a whole chorus if I get money, cause all I do is get money. Money through Sunday, money through money. It ain't no stopping. Always gon' clock it. After my booking phone like I'm trapping. He a good rapper, yeah, but he trapping. I treat my shows like I'm getting lows. I gotta get off anywhere I go. Yeah, hop out of line. I'm in my zone. Most of this I done did on my own. I'm petty for that my mama did. I really treat these like my mama kid. They poppin'. Since I bought me that Bonneville, I'm in Atlanta from back here to Summerhill. I can't play around cause I know it's real. And I know it's real. Get money, get money, get money. Get money. I'm getting money. I'm getting money. I'm getting money. I'm getting money. All I do is get money. Get money. Get money. Get money. I'm getting money. I'm getting money. I'm getting money.
Hey, look at you. It made it to another train. I know that's right. What we finna do? Get money. That's what it's about right now. Hey, y'all. We locked in. We ready for the season. Hey, like the song say, get money. What you doing? I'm getting money. I'm getting money. Hey, if you ready to get some money this season, drop some flames in the chat. You ready to change your life this season? Drop some flames in your chat. I'm talking about say, all I do is get money, money through Sunday. I know that's right. Hey, he said something when he said that, right? Hey, I answer that tax phone like I'm trapping. Nah, for real, for real, for real. Hey, I'm happy that y'all made it tonight. Hey, we locked in, y'all. We locked in. I'm fired up. I'm excited. I thank you guys for showing up for yourselves again, man, because it ain't easy being consistent, you know. So shout out to you guys for showing up for sure. Like I said earlier, if you was on the call, I touched on it a little bit, but I reiterated, all right. So one of the first things is going to be, guys, keep in mind that this training I've extracted all the information that you need to know as a tax professional. So we like y'all ever ate a sandwich, right? And didn't like the crust on the bread. So like you take the edges off. You know how you take the edges off of the bread, you don't like the crust on the bread. Yep. That's what I'm doing for y'all with this training. So I've already motioned to take the edges off of your bread for you. And I'm gonna cut the sandwich in half and how y'all like y'all sit down the middle of that. It don't even matter. Either way it go, y'all finna get this information. It's not gonna take us all night. That's the beautiful thing about it. And I'm gonna make it short, sweet, blunt, directly to the point, and I'm gonna break it down to where a third grader can understand it. So I mean, and literally a third grader can understand it. I tried to run a class by my son, and he was getting it. He like, I'm ready to do a tax return, daddy. I'm like, no, not yet. But now, y'all, so we gonna go ahead on. We gonna get started. I encourage everybody, like screenshot is gonna be your best friend, right? Getting your pen, get your paper. If you don't have it right now, please get it, y'all. Because again, this meeting is recorded, so the recording will be sent. But however, these materials gonna only be discussed in this class this one time outside the boot camp that we gonna have in December, but it's only gonna be discussed one time. I encourage you guys, if you do have any questions, write them down, hold them for me to the end. That way, I can get all the way through the lesson tonight. Um, if I am going too fast, I encourage somebody. There's a button that say react. If you react, I can see the reaction versus me not being able to see y'all comment in the chat when I'm going through the slides. So reacting often helps. Um, Outside of that, I think we're ready to go ahead and get started. Y'all ready? All right, let's go ahead and get started then. Y'all ready? I don't see. Hold on. We starting out wrong. I don't like the energy. Nope, I don't like it. Drop a five. Drop. Hey, drop some sixes in the chat if you ready. Drop some sixes in the chat if you ready. I see you, Jersey. Jersey, like you ready over there. I see you, Jersey. You got your pen. You got your paper. You ready? Okay, Jersey, ready. All right. All right. All right. All right. All right. Okay, okay. It looked like everybody ready. That's amazing. I'm glad everybody ready. So let's go ahead on. Let's get prepared to get this money. All right. Let's go ahead, guys. So first thing first, I want to make sure that you guys are able to see my screen. Hold on, give me just a second. Where did it go? Hold on. Make sure. Oh, there you go. Right. Okay. This page. Okay. All right. So boom. All right. So the first thing, yep, we're gonna get straight to it. We're gonna talk about the client intake. A lot of people don't understand what this process entails, right? So the client intake, this is literally going to be the form that you guys already have. The client intake is designed for you guys to be able to have all your files in order. So the intake forms that y'all have are going to have detailed information on it, right? It's going to ask all the necessary questions. So that eliminates you guys having to take the additional steps. Of course, you still have to interview your client and ask additional questions, but for the most part, hey, can you send me your ID? No, you don't have to say that. Once you send them the intake form, it's going to already have the spots on there for them to submit their ID, submit the socials, submit the kids' birth certificates, submit their proof of employment, and all of those things. So let's talk about some of the things that you're going to collect and why, right? Um, so a government issued photo ID for all adults on the return. So whether or not it's, a kid that's just turned 18 and maybe they're a college student and a parent, hey, you're gonna need everybody ID, right? Social security cards or ITINs, letters for the taxpayers, spouses, or the dependents. That's for anybody connected with the return. That's something that does not change no matter what the circumstances is. Sometimes I do know that some them ITIN numbers, they take a little time to come in. So you might have a client that has an ITIN and they might just have a letter for it. That's an acceptable form. We can accept that, all right? Income documents, W-2s, 1099s, SSA 1099s, anything that's related to income. On the form that we have a spot where they can submit all their income forms, but we also have another additional spot where we ask them, hey, did you make any additional money this year? Any other sources of income? Right? Just so we circle back, because a lot of people will forget. I made money on Cash App selling t-shirts. Well, guess what? You made the money, the IRS counted as income, right? So we're gonna touch a little bit on that and what is income a little bit later in tonight's lesson. So, like I said, I hope you guys are ready and locked in. The next thing is gonna be proof of residency for dependents. So it can be school records, medical records, or daycare records. All of those things are acceptable forms of proof of residency for the dependents. The reason why you want that type of stuff because I don't know if you guys heard, like I think I talked about it like 2 weeks ago or like yeah, like last week or something. I had a client. I've been doing this client tax for like the last 4 years, right? All of a sudden, she got a letter in the mail and they asked her, mind you, these are her kids. She's been carrying her kids since I've been filing her taxes. She worked a W-2 job. She filed head of household, of course, but they audited her and wanted proof of the dependent relationship. And the way an audit works is they're going to tell you everything, right? And they're going to have a list of things, and you're going to have to find out what applies to your client's return. So, for instance, they audited, and matter of fact, they audited her for head of household, and she didn't file head of household because I remember she wasn't over the federal poverty guideline. So that's why it's important to remember and to know stuff like that, right? So that was the thing for her. Also, they was talking about her own kid. The beautiful thing about that was it's her kid, right? So it's easy for her to provide the birth certificate. Her kid went to school from our house, so she had the school records, right? On top of that, her kid was on a lease, so that killed a lot of the things that they were asking or inquiring about. So you want to make sure that you have those type of documents and anything, in addition to support anything you put on the return. Address verification gonna be utility bills, lease, mortgage statements, things like that. If they claiming a 1098T, then you're gonna definitely need that 1098T form if they, claim any type of education credits, right? And if they don't have the 1098 receipt, I mean the 1098T form, guys, we can use the receipts from the tuition statements. We can use that. So that's another way that they can go about the education credits and stuff like that. Let's talk about child care costs. So receipts and the provided EIN number. Okay, like I also informed you guys of if they say, oh, well, the daycare didn't give me a 2441 form, right? Okay, maybe your cousin watching the kids. You can still qualify for that child care cost deduction, right? We just need your cousin's information to put on the form. So that's another way to go about it. Health insurance documents, so a 1095A. If they got marketplace insurance, you definitely gonna need that. But all of these things are asked and inquired about on our intake form. So we already asked them for these things. and most of the time they'll provide it on the forms, but you always want to kind of like circle back and just be reassured of things, double check the information. You nothing wrong with fact checking everything that they ask you. And I'll talk about how do you do that in just a second. So the prior year return, that's always great to have if it's available. And it helps spot changes and trends. Well, what do you mean, Kane? Well, if somebody, let's just say for instance, last year they had a taco truck, right? Or they had a food truck and they were selling food out their truck, right? And then now all of a sudden this year they saying there was a painter. The IRS look for stuff like that because you file in self-employment, but you keep changing careers, right? So that's a pattern. So who knows? Maybe he said he was a food truck last year, right? The year before that, he was just doing landscaping. The year before that, he just was a barber. They look for patterns like that. Why are you constantly changing self-employment positions? That's a red flag for the IRS. Um, so yeah, guys, those are things that you're gonna want to collect on the intake form for sure. And you're gonna make sure that you reiterate. Okay, Jersey. Okay, I got you. Hold on, give me just a second. Next is gonna when you inquiring about these things, you want to make sure that you're using open-ended questions, right? So instead of saying hey, it's just you and your two kids that stay at your house, instead you're gonna ask, tell me about who lived in your household this year. You see what I'm saying? That's an open-ended question. You're not suggesting anything. You're leaving you like it's open for them to be able to tell you all the information and not withhold anything, right? And you want to listen for income sources they might forget, cash jobs, side gigs, crypto, things like that. Um, and this is why we conduct interviews and talk to our clients, especially once you using everything that they gave you. Definitely double down with the interview because that interview might expose additional credits that they qualify for, deductions that they qualify for, so on and so forth, right? Next, you want to confirm who they're trying to claim and ask follow-up questions to test the eligibility. Okay. So I see you have a dependent on the return. Can you confirm the dependent's first and last name? They confirm the first and last name. Okay. So let me ask you, this, and what's your relationship to this dependent? That's their cousin. Okay. Boom. Now you found out, okay, this their cousin. They got their cousin first and last name. Okay. Do you have any documents, showing that the dependent lived with you at least 6 months out the year? Oh, nah, I ain't got nothing that state that. Okay. Um, like how old is the dependent? Okay, so the dependent's 10 years old. Okay. Did they go to school from your house? Yeah, they went to school from my house. Okay, the school don't have your address on it. The school papers don't have your address on it. Nah, nah. Okay, how long they live with you? They've been living with me for a year. Are they on the lease? So now you asking additional questions to make it make sense because guess what? When the IRS see their cousin on their return, they might spin a block and ask questions. They might want to know and request additional information like, okay, what's going on? We see they're claiming this dependent. What's the relationship to the dependent? Do they have proof that this dependent lived with them, right? Do they have proof that they provided over half the care of the dependents? Because these are the questions that they base the eligibility to claim a dependent on, especially when it's someone other than like your immediate child. Um, Next you want to ask about life changes such as marriages, divorces, new job, school, daycare, somebody might have died, things like that. You always want to ask about any life changes, because sometimes people forget. I mean, we're human beings. They forgot they got married, right? They've been together so long, they finally got married and forgot they got married at the beginning of the year. It's crazy, right? It happens. You want to get clarity on household dynamics, especially for the dependents that's being claimed and head of household claims, right? And last but not least, you want to make sure that you take notes during the interview for your records and your due diligence. And again, guys, we always put our due diligence in what? A Word document. Where? Man, follow me when I say this. We're gonna pause real quick. Doing taxes is something that's very, very lucrative. But just like anything else, there's always a risk with every reward. Okay. We work with the feds. I understand it might not, hey, when you say it like that, it sounds crazy, but it's the truth. We deal with the IRS. We're the direct link between a client and the federal government, right? So the federal government is looking to us to make sure that everything is lining up on this tax return, and the client is looking to us to make sure that they get everything that they qualify for. With that being said, it's important that you take the proper notes. How do you cover your own back? Let's talk about it. I say put your words, I mean put your notes on a Word document. Keep this in mind. Let me be very, 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 very specific when I say this. That Word document, I'm gonna tell you straight up. I put mine in the Google Drive. Okay, it's in my Google account. Straight up. And the reason why I do that is because if the IRS, for people that might have brick and mortar offices and stuff like that, they will take your entire computer. And I think about it like this: they gonna get in that computer, right? And if they get into your and that's another thing, like my Google, don't get me wrong, like I have it on here, stuff like that. But the beautiful thing about Google is you can sign out of any device at any time, right? So let's just say, God forbid, I was in that situation hypothetically. All of my documents are stored in where? My Google Drive. So if they were to take my computer, it would be nothing like, it would be nothing on there. Everything is stored in my Google Drive. So that's how we cover our own backs, because at the end of the day, you need to make sure that you are maintaining your records. And not only that, if they're asking or inquiring about any specific file, you have the ability to be able to pull up that file and prepare for their audit if they're asking to audit a file, right? That's the whole main thing. People get so scared. Oh, the IRS can audit me. I can go to jail. Listen, if them people ask you about a specific client, now they send you a list of every client that they're gonna want to look at. When they send you that list, you have the ability to be able to respond to them and say, "Hey, I don't have everything. I need to get everything together for you. I need 30 days." Right? You can do that. And they're gonna wait 30 days. And they're gonna reach back out to you. Hey, we scheduled an audit for you. We need to meet with you to talk about these things, right? That's the way it works. You might put it off again. Hey, yeah, I'm out of town right now. I totally forgot. Hey, I need another 30 days. I've had people that I know. I never rescheduled a due diligence audit that many times, but there's people that schedule it 2, 3, 4, 5 times. But all in all, they'll give you time to make sure that you have your files together to avoid fines, penalties, and things of that nature. I know Jersey said he had a question. Um, so yes, yes. So that's what Burgundy was talking about. So before I get to you, Jersey, Miss Compost, I want to make this clear. So yes, she was saying she keeps them in file cabinets and not on a computer. Either one is fine. And this is what I'm saying when I say on the computer. They're in my Google Drive. So they're not technically on my computer. They're stored in a cloud. You see what I'm saying? So literally, so my computer, you go to my save files on my computer, you're not gonna find the tax return. You get what I'm saying? You're only going to see like the courses that we teach and things of that nature. You're not going to find anything related to a client on my computer. It's going to always be in my cloud. You get what I'm saying? Other than that, yes, it's good to have physical copies of your files, but I'll be transparent with you. We see it all the time. Tax preparers offices, they get vandalized, broken into, things of that nature. You definitely, if you're going to keep hard copies of your files, put them in a locking file cabinet. You want to have a file cabinet with a lock on it. But ultimately, if the IRS do say we want to audit you or ask you any additional questions, the beautiful thing about that is you can print out all of these things, right? And guess what? They're going to have you scan it into them electronically anyway. You got to scan it in. So, I mean, it's just, hey, whatever you prefer, but more than anything, don't put it in the system. The only thing we put in the system is see prepare for notes. Okay? That's the only thing we put in the system, and we put it on one specific page, and that's the 8897 form. All right. Um, other than that, we don't put anything on the miscellaneous part or anything like that. We only put that one note on the due diligence page of the software. That does not change. We put it on a Word document in a cloud-based storage, not on your computer directly, in a cloud-based storage where you will always have access and be able to, print it out, log out the account if you somewhere else or anything like that. And it's just being steps ahead of the game, because you gotta know who you're dealing with. And even though we work with them people, they not technically our friends at the end of the day. Because guess what? They'll find you just like they'll find a taxpayer. And that's just the truth of it, right? So we got to make sure that we stay up ahead of the game, stay prepared, and stay ready. What are the most common red flags that the IRS looks at to cause an audit? I'll get to you in just a second, Susanna. That's an amazing question. Jersey, I know you said you had a question for me. Go ahead and feel free to come off of mute, man, so I can get you real quick.
Yeah. Yes, yes. You kind of already answered my question. It was more so about the audits. So I'm just let you continue to the next one, man. I'm listening and taking the notes.
You sound kind of far away. I can't really hear you
Uh,
well.
I got my headphones in. I said you already kind of answered my questions. It was more
Okay.
so about audits. So
Yes.
I'm just let you move on and take the next question. I
Okay.
got my
Okay.
notes
Okay.
down. Thank you.
All right, man. That sounds great. Then I'm glad I was able to address your question without you even having to ask. That means I'm doing a phenomenal job.
For sure. Thank you.
All right. Absolutely no problem. Let's go ahead. Susanna. She said, "What are the most common red flags that the IRS looks at to cause an audit?" Hey, that's an amazing question. Give me just a second. I think. Okay. So let's talk about some of the most common. Hold on, because it's right here. I got it right here. Okay, so we ain't got to worry about it. I can answer it because I don't see it in the slides. I'll answer it for you real quick. So some of the most common reasons that would trigger an audit. Um, there are four things that trigger most audits. Okay, write these down. Head of household filing status. That is the number one most audited most that's like number one for the most audits, the head of household filing status, because a lot of people don't understand the qualifications for head of household. We're going to get into that tonight. We're going to talk about what the qualifications to file each filing status is. All right, so head of household is one of the most common reasons for a audit. A Schedule C, self-employment. That's the second reason. That's like the second highest reason. So you put them two together, hey, it's probably like a 20, like about a 20-15% chance that their return could possibly be audited. I'll just be honest with you. It's not very, very common due to the volume that they have, but realistically, those are like when you have those two together, it's a chance that the return can possibly be audited. Okay. Your risk increase once you have those two together. Um, the next one would be child tax credit. Child tax credit. So people claiming dependents. Claiming dependents is also one of the most audited things, one of the most common reasons to be audited. And last but not least, I would say the earned income credit. Um Based off of when you file, right? Some people tend, maybe they made a lot of money and they need to reduce, how much money they might have made because they tax that they supposed to pay is skyrocketed and they might not even qualify for the earned income credit. So a lot of times what people would do is, we remember what the earned income credit is, right? We talked about it last week. So what a lot of times people will do is they might say they have a business or something like that and reduce the amount of money that's actually counted as income, right? With business expenses to kind of reduce how much money they made. So when they reduce how much money they made, it brings them closer to the range to qualify for the credit because they didn't make a lot of money, if that makes sense. So that's one of the things that earn income tax credit, head of household, uh Schedule C, and the child tax credit. Those are four of the most common reasons a return would be audit. Less common for the earned income credit, but definitely the child tax credit for sure. That Schedule C, absolutely. And head of household, definitely those four things. All right. Let's see, what page are we on now? We on right here. Okay. Why interviews are important for filing statuses. It helps determine whether they should file single, head of household, married filing joint, or another status. This matters. Hold on, guys. My apologies, guys. Why it matters. Filer status affects the tax bracket, right? The standard deductions and the credit eligibility. So head of household is often misused. The questions that they have for head of household verify the true if they truly qualify, right? Um, some of the key benefits of interviews is to protect against earned income tax credit audits by confirming if the taxpayer provided over half the cost of maintaining the home. So all of those, like I said, are very, very common reasons that you want to have an interview with taxpayers. And not only that, reasons for audits. So you handle your business, you talk to them, ask the additional questions that you might need to ask them so you can get a clear understanding as to what they're claiming, why they're claiming, and how, right? Next, we want to talk about something called the IP pin. I know we went over it a little bit earlier this week, and I told you guys what an IP pin was. It's an identity protection number, right? This is more common for people who are victims of identity theft, and they'll automatically receive one by mail. And it comes in the form of a notice. That notice number isn't really important, guys. I mean, they're gonna get their number in the mail. If they don't receive their number in the mail, they're able to log into their IRS.gov account. Into their individual account and they can literally pull up the number online. So all the people saying, "Oh, I don't know my IP pin or I didn't get it in the mail," log on to IRS.gov because you got to have an account. That's how you even get an IP pin, right? And then pull up your IP pin number. It's pretty simple. It's pretty quick. Does not take long at all. All right. Taxpayer can voluntarily opt in through their IRS account, and anyone who enrolls is required to use it each year moving forward, meaning they can't have it one year and then don't have it no more. Now, that's a lifetime decision. All right. Even dependents may have an IP pin if their identity was compromised. A lot of parents, when they have kids that's been, falsely claimed on the other parent's return, they'll tend to go and put an IP pin on their child's social. With that being said, you need to verify if anybody has an IP pin, right? Because our questionnaire that we have on our intake form, it does ask, do they have an IP pin? But CYA, remember, we're covering our own backs. All right. So with that being said, we also want to inquire about it when we talk to them because they might put no on the application and forgot. And then by the time you talk to them, oh yeah, I do got an IP. Exactly. And keep in mind, this can cause a return to be rejected. So let's just say you got a client and you get this client in advance, right? $2,000, $3,000 advance they get approved for. They excited. They got the money, right? And this is before the IRS opens, right? Because we do offer advances before the IRS opens, if y'all didn't know that. Um, so they get the advance and then the IRS open and then they reject the return because somebody got an IP pin. Now at this point, you calling the client and the client's not answering the phone for you. You texting the client not texting you back. Now at this point, you've lost. You lost. Not we. Hey, I love y'all, but not that much. Okay, you lost the bank's money, right? Guess who have to pay that back? They gonna try to charge it to me, but I'm charging it to you because it was your client. It's your responsibility to make sure you asking the right questions. Me personally, I'll tell a client real quick, hey, yep, you need that advance. Yep, hey, yep. I apply for your advance. We'll find out. And hey, I'm gonna be honest. Can I tell y'all the truth? Nine times, if this your first time filing with me, 9 times out of 10, more than likely, I did not apply for no advance for you. We got to build trust first, you know. And I don't know you, so I'm not gonna put my neck on the line. File for you in advance. You get $5,000, and then come IRS come and open. Now we finding out that you owe IRS some money, you owe court fees or something, and now they taking your return, and I'm left holding the balance. I'm left with the bag. Nope, won't be me. So with that being said, offer ref offer refund advances, of course, because that's a great marketing tool, marketing tactic. But be selective with the people that you actually apply for an advance for. Does that make sense, guys? I don't think that makes sense. Y'all ain't get it. Did y'all get that? All right, man. We gotta make sure they call it the art of finesse. That's what they called it. I learned, I'll be catching on a little bit. They call it the art of finesse. But knowing exactly what to say, how to say it, and more than anything, getting that understood with your clients, because you don't owe nobody no money, and you don't even know these people like that. We got family members. I got a cousin right now. I wouldn't loan them $20. So so when we talk about people we don't know, and we talking about thousands of dollars, y'all, and our primary clients, our target audience, sometimes taxes is all they really get in a lump sum for the entire year into the next season. So, most people with that amount of money, they probably not gonna do the right thing. And it's, unfortunate, but you have good ones that do the right thing. So again, trust your better judgment and choose wisely who you giving those advances to. All right. We're gonna keep rolling, guys, because yeah, whew, I got some information for y'all tonight. All right. What's the filing status and why does it matter? Filing statuses determine your tax rate, the standard of deduction, and the credit eligibility. It affects how much a tax person pays or how much they get refunded. All right. Um, so literally, that's what it's gonna do. It's gonna tell them how much they getting taxed at. It's gonna tell them how much their standard deduction is. We went over what the standard deduction is earlier this week. If you don't know, that's how much money you allowed to make before you have to start paying taxes on everything over that amount. Okay, everything over that amount is what they tax you on. All right. Choosing the wrong status can lead to audits. Remember, head of household. Y'all remember we talked about? Yeah. Can lead to audits, miscredits, or rejected returns. IRS has 5 official filing statuses, and you must pick the correct one for each return. Let's talk about the filing statuses and what are they. All right. First filing status is going to be single. Screenshot this. It's going to be used by clients who are unmarried and do not qualify for head of household or surviving spouse. Usually they have no dependents or support of others, right? Required. So meaning this is for people who don't have no dependents, or maybe they're not supporting anybody else. This is one of the most common filing statuses outside of head of household. Okay. Even if they have dependents, right? Let's just be honest. Even if they have dependents, if they're not making over a certain amount, they cannot file head of household. If they're receiving housing and food stamps, they cannot file head of household. They must file single. Bottom line, it don't change. I don't care what the tax preparer down the street, Billy Joanne, did. You come here, we got to play it smart. We got to play it right, right? We don't want no audits. So the best thing we can do for them is file them single and make sure that they understand and educate them. Okay. So you always want to ask about the living arrangements and the support. Some clients may think they are single but qualify for something better. Um, and again, that's going to be based on each situation. It's going to be different. But for single, they don't have to have any dependents or anything like that. This is pretty much the standard filing status. Okay. This is where everybody would start. And then the questions in the interview and what they talk about will determine exactly if they belong somewhere else. But everybody usually starts at single, and then based off the answers to the questions that you ask them, you will be able to figure out what filing status it is. If they didn't get full stamps the full year, that's a great question. Have they provided more than half the cost and upkeep of the home? That's the major thing. Because think about it like this: if your rent $1,500, $1,800, right? And let's just say your rent $1,500, $1,800, and you own house. So that means the government's roughly paying about, we just say 1,500, right? Um, and a lot of times, depending on what kind of government assistance you're getting, but with housing, they often offer utility assistance as well. So they're helping you with your light bill and things of that nature. So what's the remaining cost of the upkeep of the home? Maybe your water bill, right? Maybe gas, right? Um, and the food for the kids, but I doubt that those bills would total up to be more than $1,500. You get what I'm saying? So technically, you're not providing more than half the cost of upkeep of the home. The government is. So that's kind of how you always want to circle that back. Who pitching in the most? Who paying the most? Because your rent more than likely is going to outweigh every other expense in the home. All right. Answer your question. To answer your question, Allison, can a filing status be changed if it was different on past returns? Yes. Filing statuses can be updated every year. Okay, so next is going the next filing status is going to be head of household. In order to file head of household, they must be unmarried or considered unmarried on the last day of the year, meaning December 31st. They're unmarried or considered unmarried. And they must have paid more than half the household expenses, okay? They must have a qualifying dependent who live with them over half the year. For each of these filing statuses, make sure y'all screenshotting this stuff. Because I know I'm probably talking a little quick, but I'm trying to make sure y'all get the information because when I talk slow, people tend to fall behind. All right? So they must have a qualifying dependent who live with them for over half the year. All right? This is one of the most audited statuses, guys. Document everything. Leave nothing out. Document everything, right? And you want to always ask for proof of whatever it is that they're claiming. So if they claim the dependent, if they got school records, they got a lease, they got medical records, whatever they got, we want it. Okay? Sound good? All right, let's roll. All right. Next is going to be, what we at 37, 38. All right, let's talk about it. Married filing joint versus married filing separate. Screenshot this page. A lot of key information on here. Married filing joint is the most common and beneficial for married couples. Let me say this again. Married filing joint is the most beneficial and common for married couples. All right. Both spouses report all income, credits, and deductions. All right. Even if one has no income, they can still file jointly. All right. Keep this in mind, guys. When you're doing a return, this is what I recommend, and this is just me. You can complete the whole return, right? Put all the information on there, right? And I always recommend you can see what it looked like if they file married filing joint versus what it looked like if they do married filing separate. Because in each case, it can be different. I've had some cases where if they went married filing separate, they've gotten more. And I've had some cases where when they went married filing joint, it was the best thing for them. The difference is a lot of the credits are reduced when they do married filing separate as opposed to married filing joint. They tend to usually get all the benefits, right? So that's pretty much what it is. If they have additional credits or deductions they qualify for, when they file married filing joint, they'll receive them more than likely. But when they file married filing joint, they don't get all the credits and deductions that they qualify for. I mean, the IRS got to win some way, right? So married filing separately is rarely beneficial and it often limits deductions and credits. This might be used in cases of separation, financial protection, or debt issues. All right. If you got a situation, what form is that? 8332, 8997. Is it 8342? If you in a situation, long story short, and you got two, and you got a married couple, right? And the married couple, let's just say it's a woman and a husband. The husband been on child support, he behind on child support, and she worried like, hey, he got child support. I don't want to file with him and not get all my credits. I mean, I don't want to file with him and then they take my money, right? And then you got to think about it. She filed with him, they take the money. That's how she looking at it. So she don't want to file with him. But if she do married filing separate, then a lot of the what? Deductions and credits she might not get. What's the solution to that? Okay. Well, guess what? That's why I'm the greatest mentor in the world, Craig. Let me tell you why. So listen, you got to know this for a fact that when you're working a return, there's something called the injured spouse form. Okay. This is something to protect the spouse that does not owe. Okay. In cases like this, they can submit this form with their tax return and the IRS will protect their portion of the return. So guess what? At that case, she still get a chance to get all her credits and deductions. And guess what else? Her money is safe. Yes. So please, guys, I'll drop the form number and the name of the forms. It's two of them. They got one for injured spouses and they have one for it's injured spouse allocation and it's another one. Y'all, I know so many forms. I mean, it's a, it's a lot. It's a lot up here. But I'm gonna give y'all the direct forms. One of them is to protect against things like child support and things of that nature. The other one is directed for say for instance they owed some money for some type of fraud, right? And things like that. there's a form to protect the other spouse from that type of stuff too. So whether it's a legal enforcement or like some type of student loans or whatever the case may be, there's a form for both of them. And they can be submitted with the tax return. Now, it might take a little more time to process the tax return than it would without the form, but the important thing about that is you're not in a situation to where your client feels like, you know, they're not gonna get all their money or their refund is gonna be confiscated due to some money that they spouse may owe, right? So guys, that's gonna be very key, very important. I want you guys to make sure that y'all know that and don't forget it. Do not forget it. That's like I said, that's very, very informative information. I'll make sure that you guys get those form numbers and actually be able to look at them and see what they are. I promise y'all gonna get them tonight. All right. Um, Next is gonna be just a second. We on 38. Let's go to 39. The surviving spouse. This was previously called the qualifying widower filing status. All right. They just changed the name. 2025, they changed, hey, they changing it up, right? So look, this is for clients whose spouse died within the last 2 years. They must have a qualifying child and not have remarried within this time. Okay. It allows them to still file married, filing joint, and get the same benefits. All right. It's often overlooked. So please ask about life events within the prior 2 years. Because guess what? If it's somebody that qualified, maybe she make a lot of money, right? And you got to keep in mind that the standard deduction for somebody that's married filing joint is that greater than what somebody that's doing head of household or somebody that's doing single. So she made a lot of money, and you might have her thinking she only qualified to file head of household, and the standard deduction for head of household might only be $21,950. That's the exact amount. If you didn't know, that might be the standard deduction for head of household, right? But when you start actually asking her questions, you find out that she was married within the last 2 years, and her spouse did in fact pass, and she didn't remarry, so she qualifies for the what? Surviving spouse, right? So now at this point, you take her standard deduction, meaning the amount of money she's not being taxed on, from just being $21,900 to now it's 28,700 and something dollars. You get what I'm saying? That's a big jump. That's $7,000 in additional money that she's not going to be taxed on. All right. And in fact, I think the married filing joint standard deduction this year is a little bit higher than that. I think it's about 28.9, if I'm not mistaken. Um, all right, guys, we're gonna keep rolling. We're gonna keep rolling. I know we got like 10 minutes left. I'm trying to get it to y'all. I'm trying to make sure y'all get everything that y'all need tonight. At least majority of it, right? So let's talk about how do you choose the correct filing status. Other than something called the filing wizard, I know somebody missed it. I'm gonna go back to this last slide that I just was on. Screenshot. Somebody missed it. I don't know why. Something just told me somebody missed it. I just felt it in my spirit that somebody missed it. Screenshot it. All right, y'all got it? All right, we're gonna keep rolling in. All right, so let's talk about it. Who qualifies as a dependent? Okay. There are two types of dependents. And guys, if you don't know, because I know I was on this one, how to choose the correct filing status, you can always find it in something called the filing wizard. When you go to the software, if any of you guys want, y'all got some extra time to invest into your education tonight, there's gonna be another Zoom meeting after this. Guys, y'all can feel free to inbox Julian, I think he's on here. Um, and get the link. We're gonna go over some software tonight with the next group of training that's gonna start at about 8 o'clock. We're gonna go over some software tonight, and they're gonna actually walk through a return so you guys can see some of the software and what it looks like to actually go in there and work. All right, but it's something called a filing status. If you ever have a hard time identifying how they should file, the filing status is there. It's gonna ask you a series of questions. You're gonna answer them based off the information the taxpayer gave you, and it's literally gonna generate what their filing status is for you. That's kind of like the longer way. You familiarize yourself with this material, you won't even have to use that. I promise. All right. So let's talk about who qualifies as dependent. Please note, there's two types of dependents. Yup, it's two types, not just them churn, but other qualifying relatives, right? Um, a dependent must be a U.S. citizen, a resident alien, a national, and the taxpayer must not be the dependent of someone else. All right. Dependents must have a valid social security number, ITIN number, uh, ATIN number. All right. And it's got to be issued by the due date of the return. Meaning they got to have the ITIN number when, issued by when. Even if they don't have the card, a lot of times they'll issue the number on the form of a letter. All right. At that point, it got to be on there though before the due date of the return, meaning before the return is transmitted to the IRS. All right. So let's talk about it. Uh, Qualifying child rules. There's 5 tests for determining if a child qualifies to be a dependent. To be a qualifying child, all 5 of these must apply. So meaning if they miss one, they don't qualify, right? Dang, Kane, they got off. They missed one. It don't matter. That's how the IRS feel. That's how we got to feel. All right. Let's talk about it. The first one is going to be the relationship test. The relationship must be a child, a stepchild, a sibling, a niece or a nephew, right? Or a direct descendant of any of these. I'm gonna say that one more time. Somebody missed that. So if you asking me, Kane, so you mean to tell me I can claim my uncle, right? I can claim my uncle stepson. Technically, yes, he's a direct descendant of any of those. If you got a step kid, right? Maybe you 40, 50 years old, you got a step kid, right? And your step kid might be 21, and that step kid got a child. You can file that child. All right. So that's one of the first tests. It's going to be the relationship test. The next test is going to be the age test. The dependent must be under the age 19 or under the age 24 if a full-time student or permanently disabled. Screenshot this page. The next test is going to be the residency test. They must have lived with the taxpayer for over half the year. All right. The fourth test is going to be the support test, meaning they did not provide over half of their own support. A lot of people got these kids working jobs. Say, oh, now you got a job. Now you can take. I know y'all done heard it growing up, man. It was common. You got a job now. You can pay for your own deodorant, your own soap, your own. Hey, guess what? That's a child providing more than half of their own support. The IRS says they cannot be filed as a dependent at that point. Hey, it's the rules. They paying rent. They paying towards the bit. Hey, they can't be filed as a dependent. So those are for the test. And the last one is going to be a joint return. The dependent did not file a joint return unless it was only to get a refund. All right. Make sure y'all screenshot that page. Make sure y'all got that information. We're gonna keep rolling. We ain't got long, y'all. So I'm trying to put as much in here as I can before we gotta get off, So we gonna keep going. Qualifying relative. All right. Let's talk about what are the 4 tests for a qualifying relative. All right, to be a qualifying relative, all 4 of these must apply. So the same way it must apply for a dependent, it must apply for a qualifying relative because remember, it's 2 types of dependent, the kids and the qualifying relatives. All right. So you cannot be a qualifying child of anyone else. That's the first thing first. Cannot be a qualifying child of anyone else. The next thing is going to be the relationship. How are they related or have they lived with the taxpayer all year? All right. And literally, the relationship test is going to be the same as it is for a dependent. They must be a stepchild, a niece, a nephew, a brother, a sister, a auntie, or uncle, or a direct descendant of any of those. All right. Gross income. Their gross income must be less than $5,050 for 2025. Every year, this number changed. Last year, it was $4,750. Yeah, $4,750. This year is $5,050. They gave them a little more wiggle room. All right. Last but not least is going to be the support test. The taxpayer must provide more than half of their support. Y'all got that? All right, that's a bit. Screenshot this page. We're gonna go to the next one. All right. Common tricky scenarios. Let's talk about split custody because I know a lot of people got custody arrangement. It get crazy. It get messy with these kids, especially around tax time. Let's talk about how we stay prepared and stay ready. All right. Split custody. Only one parent can claim a child. Use tiebreaker rules if they both try. What are the tiebreaker rules, Kane? I'm gonna say these real quick. but I'm gonna give the stricter details. You're not gonna be able to write as fast as I'm talking. So if you got another phone, pull out something to record what I'm saying. I'm gonna also send this recording out, but just follow along. All right. These are the tiebreaker rules. If the mom and the dad are both looking to claim the child, all right, whoever the child spent the most number of nights by is who can claim the child. That's the first rule. All right. The second rule is this: if the child spent the same number of nights by both parents, right? Meaning he stayed by daddy 300 he stayed by daddy half the year, he stayed by mama half the year. Maybe he went to school and spent the night at daddy house and he did everything else at mama house the same. However it went. If the child spent the same amount of time at both parents' house, the parent with the highest, no matter what it's the daddy or the mama, the parent with the highest AGI is the one who gets to claim the child on their tax return. Drop some flames in the chat if y'all got that. Make sure y'all with me now. Stay with me now. I know y'all might still be writing a little bit. Stay with me though. All right. So again, if the child spent the same number of nights by both mom and dad, the parent with the highest AGI is the one that's allowed to be able to claim the child. Okay. Um, Last but not least, well, he stayed by grandmother and he stayed by dad. Dad want to claim the child. No, it's actually two more things. I got one more after this. But dad want to claim the child. Grandma want to claim the child. Well, guess what? By law, dad got the right to claim that child. Okay? Dad get priority over grandmother. All right. Uh, the last and final thing is gonna be what is dang, it's slipping my mind. Um, I talked about split time. Okay, court orders. All right. So if there's a court order in place, please know this. Maybe mom and dad got a court order arrangement to where mom claimed the child on odd number of years and dad claimed the child even number of years. And this specific year, mom don't want to claim the child, right? The child still been living with dad. They waiting to get the order updated. At that point, you're going to need a release to exemption signed by mom. How we do that? Hey, dad, can you get mom on the phone? Hey, mom, I just need you to confirm your child's first, last name, last four of the social, because we want to confirm that this the mama. We want to make sure that she ain't stuttering. She ain't acting like she don't know. Oh, I gotta find a paper. No, 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 no. You know your mom. You know your child name, first, last name, middle name, last four of they. So you know this stuff, right? Confirm with mom that it's okay for dad to file a child, and mom has to be willing to sign the form that releases the claim to exemption for the child and allow dad to actually file that child, and vice versa. If it's the other way around, you're gonna do the same thing. These rules don't change for nobody. It don't discriminate based off of race, sex, religion, or gender. All right. Next thing is gonna be college students. Um, they still qualify if they're under 24 and enroll full time, even if they work. All right. They still qualify to be a dependent if they under they 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 still qualify. Okay. Social Security dependents. Gross income test applies, but Social Security may not count depending on how much they receive, and Social Security will send them a letter if they need to file that Social Security on their tax return. All right. Adult children, if not a full-time student, they likely do not qualify if they're over the age of 19. 19 and up, I already say you're grown, you're on your own. We can't do nothing for you, especially if you ain't in nobody's school. All right. Next thing, last but not least, is going to be temporary absences. It is okay if the child is away for school, illness, or vacation. I had somebody ask me last year, well, my son in juvenile, and he's been in there for about 3 months. In that instance, if the child is planning to return home, mind you, she didn't say he been in there 6 months, 7 months. He said he been in there 3 months, and he should be getting released here pretty soon. And mind you, this was closer to the end of the year anyway, so he had been home up until the time of him going away. Can she still file him as a dependent? Yes, absolutely, because he still planned on what returning back to her residence when he's released, right? It's a temporary absence, and he was already staying in the household for what, more than half the year. So yes, guys. Where we at? 44. Whew. Okay. So guys, with that being said, I think, hold on. Let me just see what else we got right here. I'm just trying to see something real quick. All right, I ain't gonna do that. I ain't gonna do that to y'all tonight. I'm gonna let y'all make it. All right. With those things being said, I know we covered a lot of material tonight. I want to give everybody the opportunity to be able to freely, you guys are able to freely now come off of mute and ask any questions that you may have over anything that we discussed tonight. Anybody have any questions?
Hey,
Yes.
hey, I just wanted to verify that the next link that I'm going to be going to, I know you went over it in the ERA training, it's the original one that was sent, correct?
It's gonna so the best way to identify the different meetings and the different trainings is gonna be by the title of the call.
Mm-hmm.
So regular tax round one training is gonna always be labeled as tax mastery training. Okay.
Okay, got it.
Round two trainees is gonna always be labeled as tax mastery training 2.0. All right. And for the ERO meetings, anytime we're meeting as EROs, is gonna always be labeled as ERO foundation training. These are recurring meetings, so please notate that. Let me see who else on here. If you can too, if you have anybody that's going to be joining the next call, if y'all can, Denarian or Ednisha, one of you guys, drop that link to the next call, if in case anybody want to join that call, and just see a brief overview of the software. I think it's about time that they start to at least see what it is that they'll be getting into. So I mean, if anybody on this call do want to join that Zoom, that option is available to you guys. You're not expected to necessarily participate, just kind of like observe, maybe take a few notes, ask a couple questions if you guys want to. Um, but before I end this Zoom, I want to also continue to flow up to any questions. Y'all ain't got no questions? All right, that's a bet. So I'm gonna ask questions then. Since y'all don't have any questions, we're gonna see how good y'all's paying attention. Cause I'm gonna be late for round one, but they love me over there. They understand. All right. So let's see who on here. All right, boom. Okay, I see what all we went over. All right, boom. So let me go over here and let me look and see. What's a good question? So let me ask you this. Up to how old can you file as a student? Up to how old can you file as a college student? What's a college student cutoff age?
I believe you said 19.
24, 24,
Uh,
24. So you can file as a student up until the age of 24. All right. They qualify to be a dependent up until the age of 19. If they're not in school. After 19 and up, they can no longer be filed as a dependent. All right. So okay, y'all following along. So let me ask you this. What is the most common audited filing status? That's an easy one.
Head of household.
All right, all right, all right. I see you paying attention now. Okay. So, all right, let me ask y'all this then. What's the most audited tax form? Got y'all. I got y'all. Y'all don't know that one, huh? Okay, Tramisha. All right, bitch. All right, Tramisha. Anisha, you don't count. Okay, Susanna, I see. Susanna ain't playing. She on top of it. Okay, so yes, that's the most common audited tax form, a Schedule C. All right, self-employment income is the most audited form. All right, I'm gonna ask y'all one more question, then I gotta go.
Hello? Can you guys hear me?
Yes, we can hear you, Jersey.
I'm sorry, bro. I was trying my phone. I was the head of household, right?
So head of household is the most
The most
audited
common.
filing status. The most audited filing form is gonna be the Schedule C.
The Schedule C. Okay, I'm gonna have to write that down and mute my phone.
All right, all right. And then I'm gonna ask y'all one more. This is gonna be a hard one because I've been taking it easy on y'all. Let's see who's really been paying attention real quick. Let's see some. What else I talked about tonight? All right, I see what that is. So let me go right here. And which filing status has the most benefits? Married filing joint or married filing separate?
Married filing joint.
Married. Married.
Both of
Joint.
them married. Which one?
Joint.
Joint.
All right, joint. Hey, man, hey, I love the engagement. Thank you guys for showing up. Thank you guys for participating. Thank y'all for actively paying attention, right? As y'all know, we right here up on the season. If you have not got your marketing materials, get with your mentor. Marketing materials should be out no later than the end of this week. Take this stuff that y'all are learning in this class, all these screenshots and stuff. Y'all should know how to prompt y'all chat GPT by now, right? We went over that a couple classes ago. Put it in chat GPT. Make sure they put it in your words. You don't sound like the feds, because you know we work with the IRS, they the feds, but you definitely want to put it where they can understand it. When you put that information where they can understand it, post it, guys. Follow that posting schedule. I know we always say, tax season right around the corner, January 2nd. That's when they can start filing. But for us, right now, they choosing their tax preparer right now. So show up as that professional. Show up, post, and always look for more opportunities to market and network. I'm Kane. I love you guys. Thank y'all for joining tonight. If y'all need any additional help or support, I'm always here for y'all. Y'all have a great night.